Hey guys, this is Justin from nextbigtrade.com. I wanted to do a follow-up video to the article I recently wrote about Chinese stocks. First, I want to go over three of the charts that I provided in that article. The first chart is MCHI, which is one of the largest ETFs for the Chinese stock market. And the biggest thing to notice is the long base that has existed in Chinese stocks for multiple years. This is something that is appealing to somebody that trades using stage analysis, because we know that from big stage 1 bases come potentially big stage 2 uptrends. And basically what's happened with China over the last couple of years is we've seen like these fits and starts where it's tried to break out into a new uptrend but failed. But in 2017, things changed a little bit. We saw a big breakout in Chinese stocks, and when the market had a big pullback in 2018, what's really noticeable to me is how this ETF found support right at this former resistance level in this long-term base. This is a pretty bullish setup, and as I'm going to show you in a second, this is very similar to what happened to biotech stocks about 5 or so years ago. And another thing that's notable to me is how the Chinese stocks didn't make a lower low in December, while the U.S. stocks and other related U.S. markets did. One of the reasons could be that the downtrend in this market kind of started earlier than American stocks, but it's good to see this kind of a double bottom form. And again, we found support even above the former resistance level. And it's notable the massive increase in volume that's occurring right now, which tells me that there's a lot more interest in Chinese stocks by institutional money than what was previously occurring for quite a few years. Now, turning to what I pointed out in the article is that having a breakout and then a retest is, happens sometimes in markets, and it happens when the overall market is under pressure. So what happened in 2011 is that we had a big rally in the overall stock market in 2009 and 2010 when the market started recovering from the 2008 financial panic. But in 2011, we started consolidating those gains, and 2011 was basically a sideways year for the overall stock market. But what was going on with biotech stocks was that it was actually breaking out of a long-term base, and biotech stocks became the next leadership sector for the 2012 to about the 2015 time period for the stock market. Really, biotech stocks, some of these stocks had enormous gains, and you can see why. They broke out of this massive basing pattern and into a stage 2 uptrend. So it's very intriguing to me to see Chinese stocks kind of showing a similar pattern right now. Just taking a look at the KWEB ETF, kind of seeing the same thing. This is a China internet ETF that's only been around for about 5 years. Again, same thing, basing pattern, attempted a breakout last year or 2017, big retests, and then look at the volume. It's just, the interest in this sector is undergoing a dramatic change right now. So next I want to look at some individual Chinese stocks. Okay, so first we're gonna look at the Chinese ETF A shares. And again, look at the ferocious volume that's occurred over the last couple of weeks in this ETF. And look at how it's maintained an uptrend over the last couple of weeks while the S&P 500 has kind of been consolidating sideways. This is showing that there's a big rotation going on into this portion of the stock market. And I think it's going largely unnoticed because the headlines for China are still largely bearish. And if you type Chinese economy into Google, almost all the articles you'll see are about how the economy in China is slowing. But we know that the stock market leads the headlines and it leads the economy. And what I think is actually happening is we're seeing a new uptrend forming in Chinese stocks. Now we're going to look at some individual stocks. Looking at HUYA, this is currently my favorite Chinese stock. It reported earnings this morning, and the volume for the day was the biggest daily volume ever in this stock. This stock has like a 50% short position against it, and it basically is just breaking out of a stage 1 base into stage 2 over the last couple weeks. And the volume is starting to really increase on the weekly chart. And notice how it's starting to outperform the S&P 500 as well. So this is, still kind of at a low risk buy point. It's about 30% above the 30-week moving average, but is just now breaking into stage 2. Now, NIO is a very interesting stock because it reported earnings after the close today, and there's been a lot of press on this stock recently. 60 Minutes had a recent report that got a lot of attention, and we saw the volume in this stock explode shortly after that segment, and it caught my attention. I took a position in the stock on the breakout, of this IPO base. Now, what happened with earnings today is that I think there was expectations were very high for earnings, and earnings is interesting because a lot of times what happens is if expectations don't match, or if the stock doesn't live up to the expectations, no matter what the report really is, the stock can really tank, and that's basically what happened with NIO after hours today. It's all the way down to like 835 after hours, which is a huge move lower. And basically the report had a couple blips in it that showed slower car sales for the first 2 months of the year. What the problem was is that the Chinese tax credit ended last year, and kind of similar to Tesla, where of course you'll expect sales to fall off a cliff when a tax credit ends. So really, it's not really too out of the ordinary what happened, but again, expectations were high, reality was way lower, so the stock got crushed. So this is going to be an interesting setup tomorrow morning because when people are panicking out of stock, it provides a monster opportunity. And if the stock bottoms around the low 8s, I mean, it's still above the IPO base, and all it would be doing was be filling the breakaway gap. So I'm going to be watching the stock very closely tomorrow morning and probably trading it unless it doesn't, if the gap down doesn't hold by the opening bell, then I wouldn't be as likely to trade it. But if it crashes in the morning, I will for sure be buying shares in the stock because I'll be taking shares off of people that are panicking. And I wouldn't be surprised at all to see a big hammer candle occur on the daily chart for the stock tomorrow, because again, we've got a lot of support here, and it's in a sector that's attracting a lot of big institutional money. So, I mean, the only thing that would be a negative is if the stock does crash through the $8 level, and if it stays below there for the entire day tomorrow, that would be a warning sign, and I would be basically exiting or looking to exit, because if support breaks, then this stock might just be dead money for a while. But I don't think that's going to happen. What I think is going to happen is people are going to panic, and the stock's basically going to start some type of equilibrium. It might have to base for a little bit to get over this report, but my guess is that the uptrend resumes shortly after some type of consolidation. So again, this is going to be one of the main stocks that I'm watching tomorrow to trade in this sector. IQ is another stock similar to HUYA, where it's an internet stock and it's a more recent IPO. Had a big move last year and then gave it all back. Kind of a big breakout on volume so far after, and it reported earnings as well, but not as big as HUYA. So I like HUYA a lot better than this stock so far, but this is another stock definitely to keep on your watch list. Kind of a nice bull flag pattern going on right now. BILI is also another interesting one where it started actually moving higher a little bit earlier than some of the other Chinese internet stocks, and it is threatening all-time highs. So no overhead resistance. This stock is definitely another stock to pay attention to. And I think really the main three are IQ, HUYA, and BILI, in my opinion, right now. With NIO, we'll wait to see what happens with NIO tomorrow morning. Now, some of the other stocks in this sector, BILI, I think this stock is similar to like a Shopify, and the stock had a big move in 2017 and 2018, but again, with the pullback, gave a lot of the gains back last year, and we don't have any type of volume yet on this breakout, so I would be, watching this stock, but it's got more overhead resistance and isn't as new as some of the other IPOs, so not really a stock I'm too interested in right now, but might be a stock to keep on a lower watch list. CTRP was one of the Chinese stocks again today that gapped up on massive volume after earnings. The one problem with this stock is that it's got more overhead resistance and it doesn't really have a nice stage 1 base to trade off of. So this is another stock that I would probably not be as, I don't like as much as, HUYA or BILI, but the volume is good though, so that's a good sign. But again, it's going to have to fight through a lot of overhead resistance to make new highs. And lastly, YY, again, an earnings winner today. It's really nice to see big volume in a lot of these stocks, which is another sign that there's a big sea change in this sector occurring right now. But the problem with YY, like CTRP, a lot of overhead resistance, not as newer of an issue as HUYA, IQ, and BILI. So one to keep an eye on, but not in the cream of the crop, in my opinion. So overall, I'm definitely paying attention and trading this sector. I am long HUYA and NIO right now, and I'm sure I'll be talking more about these stocks in the future at nextbigtrade.com.